Hey traders, welcome back to my channel. Today we're taking a look at exit strategies that can help propel your trading to the next level. Exit strategies are very important, and while I think most traders understand that they are important, many traders focus very heavily on the entries side of things, but I would actually make the point that exits are more important than entries.
Are you mad?
And I'm gonna back up my claim here, but in this video, I will be showing you a few different exit strategies that you could consider or play around with in your back testing to see if they might help to increase the profits you make or reduce the losses you make on some of your trades. Let's jump in right here.
Stage right.
All right, guys, welcome back to the channel. Today we're talking about exits, and I'm going to give you a couple examples here today. And I want you to know up front that no matter how you exit a trade, there are always going to be pros and cons to both sides. So I think what I'll do here is I will start out with the basic examples. The basic examples would be, for example, I'm going to showcase in this video a trade that I actually took. I picked up the NASDAQ last week. It was one of my best trades recently, and I do actually have a full video out on that. If you'd like to see the full video on my trade, we'll link it in the description, but we'll also put it in the top right hand of your screen right now if you want to go watch a trade that I took. It was a real live trade. I think it ended up being like a $3,700 profit, and it was one that I was pretty proud of how I managed the exit, which is of course what we're talking about today. I want to start though with the standard way that most traders, when they talk about trading or exits, they use what we call the standard kind of entry and exit in the form of a hard entry, stop loss, and take profit. This is the most common way that most traders use to exit their trades. They put, let's say they enter the market here, they put a stop to control their risk, and they put a take profit order or a target, sometimes it's referred to, where they'd like to get out of the trade for a profit. There's nothing wrong with this, but let's talk about some of the pros and cons of using what is considered, I guess, a all in, all out kind of approach. And what I mean by that is all in the sense that you take on your full position in your opening entry, which again, we'll talk about entries another time, but today we are focusing on the exits as I do think it is, again, like I said, probably more important even than where you choose to enter. Anyways, all in on the entry and all out, whether it be for a loss or a profit on the execution here or here, right? So the take profit or the stop loss gets hit, you're out of the trade completely and all done, right? So this is probably the most commonly used approach to trading. And there are some inherent pros and cons. Some pros are that this approach is actually very simple in the sense that, okay, you know when you're in and you can actually kind of set and forget. S plus F. S set and forget, meaning you can set your trade up, let's say it gets entered, and you just leave it be. You don't play around with it, and it either hits your take profit for money or it hits your stop loss for a loss. Very simple, right? It's straightforward. S plus F. It is set and forgettable, right? Whereas some of the other ones that we're going to go over today are more active or involved, and we'll discuss that further. So that's of course a pro. Another pro is that you can kind of, if you are confident in your technical analysis or your logic behind where you get out of the trade, you can kind of just move out completely of the trade. Let's say that this market did not keep going. If you had set, a target at the previous highs, this is often what traders do. They set targets at previous structure extremes, and so bam, let's say you just get out of the trade, no more funny business, you're all out, and sometimes that market comes all the way back down, and in this case this strategy is the best. Now again, remember I said pros and cons for everything, so let's talk about cons. The con of using a hard take profit like this is that you oftentimes will see that the best trends out there, you're going to leave some money on the table. So under cons, I'm going to have the editor help me to fill in magically some text here that basically says you could leave profits on the table. Now, meaning if this market keeps screaming higher and you already took profits completely, you're no longer participating in the run. Now, of course, everything has their pros and cons, so let's talk about strategy number 2 for exiting. Strategy number 1 was the set and forget entry exit through a take profit and stop loss. Very, very straightforward. The second, I would say, is probably the most universally accepted because it kind of has, it does still, of course, have its pros and cons, but it has a little bit more of a middle ground stance. The second strategy that we're talking about today on how to exit a position, assuming we have our same entry, is partial profit taking. So again, partial profits. If you've never heard of this concept, let's say that you enter into a position and you set a target here, but let's say you don't want to take your full position off. Remember when I said, again, you're all in, all out on the first strategy? Well, the second strategy is not that way. In fact, let's say that you're taking a NASDAQ 100 trade, and depending on if you're trading Forex or if you're trading shares, you might have different techniques, right? If you're trading shares of NASDAQ 100, maybe you're trading QQQ, which is what I trade. You might be buying shares. So let's say you buy 100 shares of QQQ. And if you're trading on a Forex broker, NAS 100, a CFD is what it's called, perhaps you're trading lot size. So let's say you trade like 0.01 lot. It just is going to depend. But regardless, the point is the same. Doesn't really matter which type of market you're trading. You could also be trading futures, right? There's all different ways to trade the indices, just as this is what I've got pulled up as an example. What you would do in this case is you enter more than one entry. Of course, you may need to reduce your size. In fact, you probably shouldn't take 2 full position sizes, but partials are awesome because what they allow you to do is they allow you to enter the market with a few positions and scale out of a trade that goes in your direction. Now, of course, if it does go against you, then you're just going to take a loss on all of the positions that you take. But let's say in this example, you actually put 3 trades on at this point, okay? So I'm gonna actually just use this here. Okay, so let's say that you have the first trade, you have the second trade, and you have the third trade. I know this is a bit messy, but bear with me here. The concept is this: you enter once, one time at one, you enter at one point in time, but you enter 3 small trades instead of 1 big trade. Okay, so let's say if you were trading lot sizes, if you're a Forex trader and you're trading the CFD for NASDAQ, let's say you took 0.01, 0.01, 0.01. Okay, now you're basically splitting up your trade into 3 targets. So on the first trade, let's say it runs up here and you're out of the trade for a profit, but you still have trades 2 and 3 that are still open. Let's say the market continues to break out higher, and in this case, you take profit 2, right? And finally, take profit 3. This is what you'll often see. A lot of times signal services, they will do this. I will say be very careful when people do the take profits 1, 2, 3, 4. What they'll do, this is just a little heads up, little pro tip. I've been in the industry for a while. I know, I would say I know things pretty in and out overall. What Forex signals services will sometimes do, which I think is a bit misleading, is they will take this trade and they'll count it as, let's say this is 2,250 pips, or let's say at 2,300 pips, and then this one would be 3,750, and this one is like 6,000, let's call it. What they'll do is they'll mark that up as all 3 collective total pips, and if they lose, they'll just count it one time as 1 loss. I hope that makes sense. If it doesn't, maybe I should make a whole video on that. That's probably coming in the future. That would be a really intriguing breakdown. Anyways, more on that later. The point I do want to get at is in terms of you as a listener trying to learn about exits, very important note here is that this does allow you to capture a little bit of the best of both worlds. And we will get to the third exit strategy in a moment. But in this case, you're able to essentially capture a lot of this move, but scaling out to lock in profits as the trade goes. Now, again, same thing on the downside. If this market breaks your structure, whatever your entry strategy is, you still have just a hard stop loss that gets you out of the trade. Okay, so I would say the pros here are this allows you to, again, capture more of a move. And it also allows you to kind of have a little bit of best of both worlds. You're letting winners run, but you're also locking in profits. Now let's talk about cons. Cons of this is that sometimes it still doesn't allow you to capture all of the move, in the sense that, okay, by the time this third one gets hit, assuming you just evenly distributed your 3 targets, 2/3 of the trade has been let off. And so even though the best move occurred here to the end, your position size is tiny by then. So in some ways, the con of this style of exiting a trade would be that while you do let your winners run, you still cap your winners pretty aggressively. Okay, so you still cap your winners. This is what I would say for partial profits. Again, if this is the style that you're looking for, though, you want to lock in profits and keep a decent win rate, but at the same time capture a good bit of the move, partial profit taking may be the one for you. And the third thing we're going to talk about is trailing stops, which is how I personally trade the markets. And I do want to just say at this time, in the comment section down below, let me know, which style do you resonate the best with? Which strategy do you use? Let me know down below in the comments. There's not a right answer, by the way. There is no, in my opinion, there's not a superior exit strategy. There's strategies here that work better on particular markets, as well as styles here that are more suitable to certain people. Some people prefer partial taking. Some people like the set and forget approach, and some people do like trailing stops. So let's talk trailing stops. This is how I was able to capture the full move here that happened this week. And again, this trade ended up closing out for $3,700, but the initial risk was just about $1,000. So let's go back to this concept again, and this time we're talking trailing stops. So let's say this market here, I have my stop loss in place, and this market rallies higher, right? With a trailing stop, there's all different styles of trailing stops, and I should make that apparent as well. Some traders will use a very strict, specific distance trailing stop, meaning that for every, let's say, 1,000 pips on NASDAQ that it trails higher, the stop loss can actually be made to automatically follow price, right? Some people will use that on different brokerages that sometimes offer that. MetaTrader, you can run scripts that will do that for you. You can find those just searching them up and perhaps purchasing them online, that sort of thing. Trailing stops can be automated in that way. That's, however, not how I personally trail stops. What I use instead is I use structure. And so what I mean by that is I use price action to trail my stop loss. So I took this initial trade over here, and the markets ran up to this previous structure high. Upon breaking out and retesting this area after it found support, I took my stop loss and I moved it up behind market structure. I then waited for another low to form and another explosion, and I trailed that stop loss up to this area. Now you can see this little green wick here actually took me out of the trade for $3,700 profit. I rode the majority of this move simply trailing a stop loss behind market structure lows in a buy trade, and if it was a short, it would have been market structure highs. Now again, I have a full video on this if you want to get in depth with how I trail stops. We'll also include that in a card in the top right hand of the screen if you're interested in learning more about my trailing stop method. It is not magical, and of course I do want to say I'm showing you an example here where that works out perfectly. So let's now talk about the pros and cons of trailing stops, which I know oh too well from trading them for several years now. Okay, so pros. You can capture absolutely ginormous home run, or what I like to call them, storytelling trades. Like this one is a recent storytelling trade. Basically what I mean by that is it is a move that just was a monster move in one direction pretty much all week last week, and it racked up a huge trade, a huge profit on this one particular trade. So that's an obvious pro to use in the strategy. I didn't take any trade off here. I didn't take any trade off here. I held the whole trade, full position. So in this way, it is all in, all out approach. And I do have my risk defined. And so occasionally the big pro here, the obvious big pro of trailing stops, is you can have monster storytelling trades. Okay, so that one is straight up on the table. However, there are lots of cons as well with trailing stops. And I will say I use trailing stops, but very few people like them. And many people think they do on paper, but let me be very transparent. Trailing stops suck sometimes. Let's talk about the cons. The cons are that with a trailing stop, oftentimes the market does make normal wave pattern moves. It's very rare to have these types of moves, which are monster moves, right? So you oftentimes, and this is the con right here, you oftentimes get whipped out preemptively, too early, right? So oftentimes you get taken out on a very normal market move. It's very difficult to perfectly trail a stop without ever getting it hit on volatility. And so I will say with trailing stops, it could be tricky. You can oftentimes, let's say for example, this market comes up here and I trail my stop loss to break even. This is what oftentimes will happen. Market comes back and just tests this area and it just wicks one time, grabs you, and then goes on without you. That can happen, right? So a big con of trailing stops is, again, that you can oftentimes get whipped out of a trade for much less than what you had floating, right? So you're not realizing profits until the very end, which sometimes can mean giving back a lot of your gains. Okay, so the big con is you can give back a lot of your gains. So another thing about trailing stops is that they produce an inherently low win rate. There's low win rates with this stuff because, again, when you're trailing stops, it is very rare. If we take a look at the NASDAQ, I mean, recently it's been pretty nice. It's been moving very, very nicely. But oftentimes there are very much like, you know, consolidation periods, moves that would whip you out. So it is rare to capture just straight shot moves that allow for trailing stops to be so awesome. So again, there are obvious pros and cons with trailing stops, just like the rest of the exits. This, guys, is why trading is difficult. Everything that I showed you in this video, none of it is the holy grail, and none of it is going to answer all of your problems and make you super wealthy by itself without any pain and you know, struggle. Trading is a lot of pain and struggle, if I'm being very honest with you. There's a lot of stuff to learn, and no matter which strategy you use from today's video or consider using, it's going to have its pros and cons. And my advice to you would be that if you are seriously trying to become profitable in trading, or you're not quite there, you're thinking about, you know, what it takes to get there, let me tell you, obviously it is very, very difficult, but also you kind of have to pick one of these strategies that you're comfortable with and accept the pros and the cons. I've chosen to accept the pros and cons of trailing stops because, again, there is no all pros strategy. Many times you'll see people on the internet who try and tout all pro strategies, right? They never have drawdowns or losing streaks or sucky situations. I'm not going to do that to you here on my channel. I am here to share my genuine experience in trading. So if you enjoyed today's video, do me a quick favor and hit that thumbs up button. Remember, let me know down below in the comment section which strategy you best resonate with. Thank you guys for watching and have a wonderful rest of your day. See ya. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.